Let's go.
Hey guys, welcome back to the Syndicate. In case you haven't noticed, this is our first video episode. It's going to be a blast. Today, we have an incredible investor, entrepreneur, all-around interesting guy on the line. We've got Shaun Abrahamson. Yes, Abrahamson. I said that right. He's got an awesome shirt. He's got an awesome background. This guy, crowdsourcing and looking into the future of cities, society, and way of life as we know it. Shaun, thanks for coming to the program.
Great. Thanks for having me, Matt.
My goal is to butcher every intro so I can say, what's your story? How'd you get into this?
Wow. So I think I did this sort of good, bad, and ugly, or probably more appropriately, this sort of ugly, bad, and good of operating. And so the sort of last go around in 2006 found myself in New York with what I thought at the time was a decent amount of money. Turns out today it wouldn't qualify as enough money to start angel investing.
What's a decent amount of money?
It's like a little over $1 million.
Good work. I hope it's not
yeah,
Rand.
so
I hope it's not Rand.
no, it felt random, but wasn't Rand. Yeah, so sort of accidentally find myself talking to people about startups and investing. Had sort of one or two people who were sort of kind enough to point me roughly in the right direction. And, among the first few picks were companies like ZocDoc and Refinery 29. And so sort of very quickly, you can't figure out the difference between skill and luck if that's where you start, sort of all downhill from there. But so did it for a while. Really didn't enjoy angel investing. No one explained to me that the main thing that you do is tell people why they're going to fail, which is like a horrible way to spend a day, I think. And so, did it for a few years and then just, wasn't that excited. And then probably 5 years ago, had been doing a bunch of projects. So I had worked with Starbucks on trying to eliminate paper cup waste. I had worked with a friend on designing sort of crowdsourcing ultra low footprint apartment designs. And I was like, it would be really cool if I could take those things that I care about and combine them again with angel investing. Because I think I could get by saying no every day if I cared enough about the underlying problems. And, teamed up with my co-founder, Stonely, and, really just beta tested an investment thesis, which was, cities are effectively climate change. Are there founders who want to rebuild pieces of city infrastructure? And could we find co-investors to invest with us in those companies? And so we spent 18 months trying to test that out. And sort of roughly what happened was all the stuff that shouldn't have worked seemed to work. So the hardware stuff that was supposed to be too hard started to work. The companies that were selling to local government that we should never have invested in were growing. And so we started a fund in 2000, beginning of last year.
Was this before or after the crowdsource book and when you really got into open innovation?
So the open innovation stuff happened. So around the time that I started angel investing, one of the things that happened was I felt really dumb about marketing. So I would sit with founders and try and figure out launch strategies, and I was like, wow, I totally suck. I'm great at sort of engineering and product. At least I felt that I was great at engineering and product and felt comfortable talking about that stuff. But as soon as we got into communications and marketing, I was just like, okay, I have no idea. So landed up going to do a part-time MBA in Germany at a place called the Berlin School, where I was the only non-award-winning creative person. And so it was very humbling, but also very interesting because, we basically could work on a thesis question, and I chose to look at how sort of online collaboration was working. And so basically took my thesis and said, spent all the time, let's turn it into a book. And so I worked with two co-authors, one of whom runs a company in Berlin. The other is an author. So we sort of took a lot of the lessons, went out and interviewed people like Starbucks and Lego, and basically said, here's how you work with online crowds to sort of source and evaluate ideas.
Any great examples?
I think my favorite example is maybe Lego and Minecraft. Lego set up this platform where they basically said to the community, hey, if there's sets that we should have that you don't see in our stores, pitch us, right?
Mm-hmm.
And so, there was this little game called Minecraft that people were sort of excited about. And, there was this person, Notch, and they're like, hey, Notch, you've got to help us pitch this to Lego. And someone, proposed a Minecraft set. And, I think the business development people at Lego were like, what? Like, we don't, what is this? It's like an indie gamer. Like, who cares, right? And meantime, all these fans are showing up and being like, yes, of course, Lego and Minecraft, it's the greatest thing in the world. Of course, you have to do this. And the team running this were like, oh, okay, this is going to be our first winner. Like, it's not even a question. The people sitting on the other end at Lego are like, yeah, clearly the fans love this. And so they, sort of put the first set together and did it. And by this time, the sort of BD and product people at Lego were like, oh, this is actually a thing. And in terms of scale, they've never shared the exact numbers, but if Star Wars is their biggest franchise, my sense is from the little bit that they shared, like Minecraft got up there pretty quickly. And it was interesting that like the BD people are, chasing down Disney, but the community was like, yeah, we already know what the next, sort of great franchise is. So I thought that was kind of cool.
How do companies do that without doing a shitty job? Typically, there's like, post your Instagram pictures and tag us saying we're the greatest company ever. How do companies do it and innovate?
Look, I think my sort of main sense was you have to invite people into like a key process that's valuable, as opposed to thinking of it as like an engagement or communication strategy. Like I think if you say to people, look, we really, like as a core business for Lego, we want to find Lego sets that people are excited about, help us with that problem, as opposed to take a picture of the thing that you built with your kids, right? Like the first thing is an actual interesting challenge. And if you can be rewarded, like, other than getting to work in sort of product for Lego, if I could find a way as an outsider to sort of show up and recommend the thing that's going to become a, double-digit proportion of revenue every year, that's kind of cool. That's a real opportunity. And then the other thing is compensation. Like, I mean, I think you can go sort of, if you're going to ask people to help you on really sort of core processes, you've got to reward them. So I think some companies realize the first thing, and then they kind of mess up the second. Okay. The sort of incentive piece.
This ties really well into cryptocurrencies and ICOs. What are your thoughts?
So as you might imagine, so the part that I like, it's interesting. The part that I love is probably the piece that I think probably gets the least attention, which is the governance piece. I think the sort of ICO, the sort of fundraising piece that gets a lot of attention is maybe the least important in the longer term. I love some of the aspects. Like I love the fact that people are writing white papers, like basically long form pitches. I think that's interesting. So there are pieces of it that I love. I think for us, like we sort of did an amendment with our LPs so that we can do token investments. I think we still haven't figured out the right way. Do we mix that into our current investments? Like, how do we think about returns and multiples and ownership? All of those fun things. And then, so we've looked but haven't. We've definitely been sort of reading the menu.
Yeah, it's hard to invest in two different asset types where one is liquid and one's not, and you have your fund cycles. It doesn't seem to fit together incredibly well.
So I think where we've arrived at is, so one of our partners used to run municipal finance for Citigroup. Mm-hmm. And so we have this sort of weird view that is totally outside of venture with someone who is sort of organized about $1 trillion in finance, which is like, I mean, it's a large number and it's all debt. And so one of the things that we found ourselves looking at, and so we are not at the point where we have anything to share, but we think that sort of blockchain fits very well with distributed assets. And the next generation of sort of rebuilding cities has a lot of these distributed assets. And it turns out that as we follow some of the founders, particularly who are doing hardware, there's a point at which they're raising equity when they could probably be financing these things in a different way. And so, for us, we probably land up setting up a fund, and this is sort of premature in terms of like how much we've thought about it, but we think that there's a distributed city assets fund. So think bike share, irrigation controllers, batteries,
puppy sharing.
Yeah. Well, I don't forget to. We may have the eBay rules about sort of live things versus inanimate objects, but there's certainly like a lot of things that are connected to the internet that are really interesting and useful pieces of next generation infrastructure. A lot of those things are being created by startups, and a lot of them would like probably non-dilutive capital. And so that seems like an opportunity.
It's interesting. So I've been wanting to ask you this since the beginning of the show. You have a legendary beard and $1 million. How did you get to that point? What's your skill set? What's your background? How did you become an angel?
What's the skill set? So I guess, so I'm an engineer. I don't think you can outgrow that. Even if I have a beard and I learn copywriting, I don't escape that background. So landed up coming to the US to go to MIT and do computer-aided design, which oddly enough didn't involve any real visualization in the sense that people like would be used to. It was mainly simulation. So landed up doing things like at the Media Lab talking about genetic algorithms and optimization and how you do lots of fun stuff that's very popular now. But this was sort of mid-90s. And I had a professor who was like, yeah, we should just commercialize this. And I was like, yeah, that seems like a good idea. Let's go and get money. And so I had a bunch of funny experiences, like, trying to convince Mitch Caper to come to our lab after a lecture. And but had absolutely no idea what we were doing. Raised about $1 million and got sort of, 12 months in and realized that we were probably building a consulting business. Right, like we were going to people with a really complex product. I think the U.S. Navy and Bose were the only people who knew how to use it, and everyone else was like, "Wait, sounds awesome, but can you just lend us people to build models?" And we're like, "Okay, we've started a consulting company." So landed up going to work. It was probably like I want to say like the 13th person to join ZocDoc, which became a documentary called Startup.com. So didn't make any money from that. And then landed up at a company called Star Media, which was ultimately delisted and sold. And then a friend of mine who had started Mail.com in sort of the first .com cycle had put together a team that had all been like super wealthy on paper in the first .com bubble, and then had made a little bit of money, but had all realized that they sort of had learned a bunch of things and had some interesting assets. And so they were looking at how do you sort of protect intellectual property on the internet. So this is like just as Napster is happening and the recording industry is like freaking out. And then the movie industry is like, well, we don't really have to worry because bandwidth's still an issue and people can't get movies. So, but the music industry was freaking out. And we started basically selling them analytics tools. It's like, can you see, what people are downloading? And the initial thinking was that you could send cease and desist letters, right? Based on sort of on copyright infringement. I mean, that was the original idea, right? So we went out and discussed it with the Recording Industry Association. Then individual clients wanted to pursue, like different music studios wanted to pursue different strategies. And so very quickly we landed up with a range of offerings. We had, things we called interdiction, which were like basically slowing downloads or setting up like fake download sites. I mean, it was fascinating, but it was sort of a wild ride. And we got a few years into it, and we went out to raise a Series A, and part of those discussions turned into M&A, and the next thing we had an offer, and I think everyone that had, sort of been a sort of multimillionaire on paper in the dot-com bubble was like, oh, someone's going to wire us cash. Yeah, we should probably take that.
How do you advise startups that you work with now when something like that comes out?
Well, I think it's like a super personal decision, right? Like, I think our decision was like very reactionary, right? In the sense that in this group, I was probably I had a little bit of stock, from advisory stuff that I'd done in the late 90s, but nothing that was going to let me retire. All the people that were co-founders had been like absolutely retired. Like on paper, done. Like I have to set up a framework to give away the money. Like that's how done they were.
Like what type of numbers are we talking?
No, like close to a bit. I mean, like Mail.com, Gary Millen from Mail.com at that point was younger than Zuckerberg when he went public, and the numbers were ridiculous. I mean, it was well into hundreds of millions on paper for a while. So. It didn't get all the way to zero, but it was substantially less than that number by the time the ride was over. And so, he was the president of the company, and I would sort of look to him as sort of older, wiser counsel. And he's like, yeah, you've watched this happen. You have all the friends who can tell you the stories. We should probably exit. So what I say to people is, look, I don't, you're unlikely, some people are in that position where they sort of had everything and then lost everything. It's less and less common to meet people like that now. And so I think as an investor, selfishly, I'm like, yeah, keep going for the most part, right? Like, but sometimes the offers are big enough. Like it also depends on the sector. Like some of the sectors we in, the strategics have really woken up and recognized that they are making decisions on valuations that are blocking competitors from getting things. And so there's a lot of dynamics that used to only exist in tech, where people would pay a premium to deny things to their competitors, that are now showing up in areas like transportation and logistics and potentially even real estate and infrastructure and construction, things that are sort of about as far away from tech as most people could think. And so some of those are going to be difficult conversations because it's like, wow, that's a huge amount of money. It seems like a massive premium. Yeah, you should take it. It depends on the situation, I guess.
So you talked a little about your focus, but you focus primarily on cities, everyday economy, everything around transportation. Talk a little bit more about how you narrowed down your focus and what you guys look for in companies.
Sure. So I think the high level sort of framing for what we look at is, climate, right? So we either think about reducing emissions or increasingly adaptation. So assuming that, we stuck with 2-3% warming, there's lots of consequences for everything from flooding to food. So that's the one set. The other thing that's less obvious is assuming we redesign cities over the next 2 or so decades, high density lifestyles, that's sort of urban and even some denser suburban, are really desirable, but they come with lots of negative consequences like traffic, public health, and public safety. So those are the two things that we look for. If you're solving either the first thing or you're solving things that are negative consequences of density, those are interesting to us. And so roughly we've landed up in 4 areas. The one is built environment. So everything from sort of real estate to roads and bridges, utilities, which covers sort of electricity, waste, water, air. So that's the second category. The third is actually local government. So basically things that enable service delivery for local government. So we have investments in sort of public safety or sort of getting into public health. And then the last group is mobility in the sort of broader sense of moving people and stuff around. So those are the 4 sort of buckets.
I see a ton of potential there, but why? There's got to be a story on how you got to that.
So fear. I mean, just fear. Like I have two young kids. I sort of look around at policy and I look around at what I think. Like it's very hard to have a serious conversation about what happens to the food supply under some climate models. Or, like I'm sitting in Miami at sea level. So if my 11-year-old says, yeah, let's come back and visit the house in 20 years, I'm like, yeah, we'll bring a boat. Or probably we won't. That's insane. Like, that's just crazy to me. But it's created a real fear when I look around and I'm like, I don't know who's going to solve this. But my sense is that the bulk of people who are going to solve it are probably just starting to build companies.
So you think it's more going to come from there's really there's four ways it could happen. Society saves itself, which won't happen because people are too short-sighted. Government saves people, which won't happen because it's government.
By the way, I love that you didn't even. You're just like matter of fact. Okay.
Oh, I mean, it's very instant gratification. There's two different areas that I think could be beneficial to these type of challenges, and that's A, startups, and B, rich ass guy who made a ton of money and now decides he wants to save the world. So you have your Bruce Wayne, which Elon Musk, comparable, Tony Stark kind of deal. What are your thoughts? Do you think that startups will be able to do it on their own, or do you think it is going to take one of these uber wealthy type people to commit to making changes?
So there's some very weird coalitions that we are starting to see. So for example, one of our very first investments was in an irrigation control, a company that makes smart irrigation controllers called Ratio. Ratio, when we met them, was sort of talking to Denver Municipal Water and trying to figure out how to do sort of wonky stuff with demand shaping. So they, when people water their gardens in the summer, you could shrink demand and shrink the overall infrastructure needs. And I was like, okay, that's going to be a long and just brutal utility conversation. Like those guys don't want to take any risk. They'd rather just put more pipes in the ground, ultimately. And, sort of fast forward a little bit, sort of 4 years on, they have a top-selling consumer product on Amazon. The ratings are like 4.8 out of 5. People love this product. It's insane, right? They have sort of north of 200,000 units deployed, mainly in the US. And they get to go back to municipal water and say, hey, we solved this. Remember we talked to you about this? We solved it. We can show you that we can actually pick the homes for you that will get you the best return. And we don't do things on 10-year horizons. We do it in 6-month deployments. And so all of a sudden you've got this dynamic where I think you've got a lot of really thoughtful people working in local governments and local government agencies, but someone has to say to them, look, I just took this science fiction thing that you heard about a few years ago and I'm doing it. Do you want to buy it? And the answer very often is yes, because the people care about it. They're motivated. They can't take the risk that startups take early on. But a few years in, you can have real conversation. So that's the one thing which is sort of interesting. The second group is, sort of corporate. So we work with, Mini, BMW, and run an accelerator program in Brooklyn. And we went back and forth in talking to them for about 4 years, because my initial response was what I think most sort of angels or venture firms would have, which is, it's a non-tech corporate. They're not that serious. It's probably like a PR thing. Like, why do they care? They don't really want to work with startups, right? And I think what we were doing was sort of watching iVentures get to the point where we're like, holy shit, these guys have built a portfolio that we'd love to build. This is not like playing around for fun. Like, they are actually building a great portfolio. And then you sort of get at why, and you're like, okay, you can sort of see that they know that their R&D team alone is not going to pull this off. So what's the other strategy? Yeah, they can do M&A, or they can preempt a lot of M&A and go and own and start to learn about some of these things. So the other area that's fascinating to me is like corporate VC is sort of moving along, I think, much faster than a lot of particularly investors realize, because I think we sort of preconditioned to not take them that seriously unless they're Intel or Google. And I think that's changed a lot. And so that's forming another coalition of, we have companies that may do rounds where the bulk of their dollars are coming from strategics, which would have been unheard of a few years ago. And then I think the rich, the rich person save the world. I do think there's going to be some of that, and I think some of those conversations are happening at family office levels. There's an enormous amount of wealth. There's also generational change. So I think the sort of 20-something with a large amount of capital, whether they've sort of inheriting it or they've earned it, expects to be able to make a return and generate public benefits. There's no dissonance there at all. I think sort of some of the sort of major generational differences versus sort of maybe people in their 50s or 60s is it made much more sense to have investments and a foundation. The foundation could do good stuff, and your investments would generate a return, and you wouldn't ask too many questions about where the return came from. That is just not true anymore for, I think, sort of more and more people who are deciding where to invest large amounts of money. And then the question is sort of, how do they do that allocation? Do they go and build a company themselves? Is it the Elon Musk model, which is it's going to be a tiny universe of people who could do that. So most of them are wanting to say, can I do direct investing? Can I be an LP? Basically, can I participate in allocation in some way and fund whatever's coming? So anyway, hope that's useful answer.
that is. And guys, just to give you a snapshot sneak preview, so we're going to be running date undetermined at this point, state and future of AI, driverless, autonomous cities type roundtable. Shaun's going to be one of the guys on there because Shaun can see the future. He has an oracle. I've seen it. He showed it to me. It has to do with the Da Vinci shirt. And then the other thing, if this comes out in time, check out our cryptocurrency roundtable. We're going to have Gil Penchina. We're going to have Andy Bromberg, CEO of CoinList, Joey Krug, Lou Kerner. It's going to be an incredibly interesting look into cryptocurrencies and blockchain. But while I've got you here, Shaun, talk to me a little bit more about the future of cities, because you're seeing a lot of things that I'm not and other investors aren't seeing. Where do you see this going? Let's have a bold prediction where you draw out on a canvas what you see.
I'm going, like we talked about the Leonardo approach to drawing on canvas, where you get to come back and go over the same layer over and over again. So I'm claiming that that's what's going to happen. I'll resketch this a few times in the future. So this is going to be mostly wrong. I think probably the biggest, sort of most interesting thing that we've noticed in the last 12 months is Sidewalk Labs and sort of Amazon. So Sidewalk is part of Alphabet. It's their sort of city-focused group. They are sort of building out part of a city in Toronto. It's a large community. Amazon basically asks cities to pitch them. And then there's a whole universe of very large real estate developers who, instead of doing the sort of smart city thing that has happened, where you have these sort of demonstration places that are meant to just showcase, you have really people who want to do real estate development. They're not doing it as a showcase. They're doing it as we think that if we use technology, we can create a bunch of experiences that people will pay a premium for or will be attracted to. And that is super interesting because they are able to take a lot more risk than city government. And just to be clear, the city government is very thoughtful on a lot of aspects of the future of cities, but we collectively do not allow them to take risk, right? In different ways. So it's important that now we have a group of private enterprises which are basically saying we have more permission to take risk, right? You expect us to take risk. So we will go and we will bring you things like fleets of self-driving cars where you won't be able to drive normal cars. That will be the only way to get around, which I believe is part of what Sidewalk is proposing in Toronto. There's no bring your own car. It's like these are our streets.
Eventually you get there. Yeah, you're not allowed to drink and
Yeah,
drive for a reason. It's more dangerous.
right.
Well, eventually we'll get to that point with driverless. What's your time frame on that? Give me a guess. I know it's a guess.
No, so I mean, time frame on driverless. I mean, I think the next 5 years, this will be something that's available in a lot of cities.
What about a ban on manual driving?
Well, so I think I think this doesn't happen, everywhere at once. I think it happened in the densest areas. So I sort of think about it as if you watch the progression of bike lanes, this is a way to think about how stuff sort of sneaks into cities. Is you'll get a community at a sort of few blocks level who will make decisions about, okay, this is, the way that we get to vision zero fatalities in our neighborhood is just stop having cars. And then people are going to freak out about deliveries and various other things. And they're like, okay, well, here's the way that will happen. We'll agree that robots are allowed to do that. So, okay, everyone's happy. Still get your deliveries. You still, can move around in the rain. But I think it's going to happen sort of very piecemeal. And then eventually when you have enough success stories, people will say, yeah, of course I want a bike lane. Of course I want a self-driving car. Of course I want, robots on the sidewalk delivering stuff.
Will people own the cars? Will city own the cars? Or will companies own the cars?
So I think we land up in a world where most infrastructure is private. Well, in the United States, I think we land up in that world. I think different parts of the world will decide how they want to do this. The challenge is going to be, where does the money come from? And I think the idea of going through government bonds to sort of own and operate increasingly complex infrastructure is going to be tricky. And again, this comes back to, there's not a judgment of capability of government. It's completely what citizens.
More and more worthless. Sort of.
Well, it's not that it becomes worthless. I think that citizens are deciding to give governments less responsibility for whatever reason. There's probably a bunch.
Or is it the rules? Is it just there's so much paperwork? After the paperwork gets so long, you eventually can't find your way out of the library.
Yeah, I mean, look, so I think there's some of that, although I think there's a lot of places where there's effort to reduce that, and there's some success. But again, I think we currently are in a mode where it's a branding problem more than anything else. It's like we expect some types of organizations to make sure things are working all the time. And we trust a really, really small universe of people to bring us new stuff and make them work. Right? And I don't think we're going to give local governments the permission to do all these things. Now, I think what I see from a policy side is I see some really interesting, like Bloomberg and the Aspen Institute are basically preempting a lot of the decisions that cities are going to have to make by helping them think about some of the implications of self-driving cars. And I think so. One of the interesting things to think about is, cities own their streets, right? So if you're going to have fleet operators, so if we're not going to own cars and you're going to have fleet operators, those fleet operators need access to the streets. So there's going to be some relationship and some control, unless everyone's going to do flying cars, and even then you probably regulate the airspace. So cities will have some control. I think their role will change, where they'll say, here are the rules of that govern how you can operate. But it's going to be interesting because you're going to have city governments negotiating with, I think, a relatively small universe of very large operators of infrastructure.
So not a more decentralized model.
I don't see how, right? Like, I think, one of the things we're trying to think through is, could the ownership be decentralized through the way in which you structure the capital stack? So indirectly, you still have, right. So you could use tokens to do stuff like, okay, the way that self-driving cars get into cities, or let's take a simpler example, that the way that you get sort of electric bike share into a city is you sort of tokenize the asset, and you have the community own, and you can define community however you want. But the governance part of the reason that I'm interested in governance is the governance part of that becomes super interesting because you could easily have the city as a stakeholder, even if they're not the underlying owner, right? Even if their control won't come through ownership, it will come through some participation in how the governance works, and that will be interesting. And having a diverse set of owners of the underlying assets, I think, are the way that you sort of prevent maybe sort of massive individual corporates from running private cities. But there's a lot of work to do to change the capital structure. If that's going to happen.
Last question before the lightning round. If assets and currency get decentralized, does that not erode away almost all power of government?
I mean, I think that there's some ways, but again, I think that cities are interesting because it's a different type of government, right? It tends to be a lot more administrative and practical, and sort of managing public interest. And so I think people will, even if you've got highly distributed, I mean, if you have governance structures that are highly distributed, people will still try and have some consensus over what is in the public good, right? And so you may get a shadow government first, right, which is like, here's this other governance structure that's doing some of the things that government used to do. But then at some point, I think it's going to be good for distributed systems to hold elections, right?
But guess what? It's treason, right? Then you're overthrowing the government. It's complicated.
It's complicated, although I don't see a way. I mean, the most fascinating discovery for me when we sort of built this out was the first. I worked at the time with GigaOM and wrote down what I think smart cities meant, like what our investment thesis was. And I had a central role for cities. And then I went to talk to a bunch of cities and I was like, oh, we're trying to solve this problem. Who should we talk to? Oh, you should go and talk to economic development people. Okay, go and talk to economic development people. Who should we talk to? Real estate people. Oh, okay. You mean real estate, the people who own the cities? Oh, yeah, that would make sense that they have outsized control. Guess what? That's what happens already, right? I mean, try get anything done in most cities in the U.S. and there's like a relatively small universe of people who decide what happens. And guess what? They own the property. So is it going to be worse than that? I don't think so. I think we could have more distributed ownership.
Okay, interesting. I want to jump to the lightning round. How's that sound, Shaun?
Sure. Yep.
What's the first deal that you ever did?
A company called Game Trust. It was founded by Adeo Resi, who now runs Founders Institute.
Oh, how'd it go?
I don't think I ever got money back.
That's how it works.
But I mean, I will say it was a very cheap education. It was very tough. There's a lot of sort of difficult board dynamics, and anyway, it was a very deep end intro to investing.
It's a good way to swim. What are you excited about today?
What am I excited about? I'm doing a lot of machine learning related things. I think we're still at the beginning of that in terms of, interesting, very esoteric domains and data sets and workflows. And I think the machine learning as it currently is sort of very well suited to quite narrow and specific and esoteric and generally boring things. Boring to the vast majority of people who've never even thought about the problems. And we love those. We love meeting founders who've sort of gone really deep. We sort of think of them as sort of ride-along problems where you really have to hang out for a while with the customer to even get a feel for what the problem is. So a lot of those flavor of things. I think the other thing is, as I mentioned, in terms of like new capital structure, for sort of growth stage, companies that want to deploy like physical assets into the world. Hardware has always been hard, but I think what people don't get into is you know, a lot of the reason for that is the capital stack. And so, I think if we can find a way to introduce non-dilutive capital into these sort of really interesting emerging distributed assets, there's a very large chance to sort of more quickly reimagine cities and have that, sort of, basically making it easier for companies that need to do some component of what they're doing with hardware.
Because banks don't actually fund startups anymore. What are your two biggest wins to date?
Biggest wins. That's tough. Is this limited to investing or anything?
Take it as you will.
No, so I think family. I think sort of being a parent is like having kids is just insane. I'd be, as I said, you asked me sort of how, what's the motivation, and I sort of mentioned fear, but I'm very conscious that, having funds that last 10 years in an environment where you really want to think about 100 years, you need some other motivation, right? And so I think I sort of think it was my sort of biggest win is like, being able to, think at 100-year, like what I want the outcome to be much further down the line, for sort of family. And that sounds very selfish, but I think, having sort of real little people in your home is a very good proxy and a very good way to be empathetic with sort of billions of people, right? To try and imagine what they have to face in the coming decades. So I hope that's the win. It feels like a win so far. I mean, my work does not feel like work, which I consider to be a win.
I think those are both pretty great wins right there. At the same time, we like strikeouts. What's some of your biggest misses anti-portfolio?
Biggest misses. I mean, maybe it's the biggest, but maybe the funnest as well. Sort of really early on when YouTube was just in its infancy, Roloff Buerta, who was, I think, had just invested, sort of shared that. And there were a couple of different reasons to do that. One of which was we were doing sort of IP and ownership related stuff at the time. And so there was like, okay, how are we going to do this thing where people share, SNL skits? Anyway, so it was sort of a funny thing, but it was like my immediate reaction to that was, I'm talking to this large company in Atlanta. What the fuck are you doing? Like, I thought you were a smart guy. Why are you giving money to YouTube? Like, they're going to get totally decimated by all these other companies with much more money. And so, of course, I didn't even think about investing. I was, so.
Oh, that's like your thesis, crowdsourcing, man. Oh.
Yeah, no, exactly. No, but it was just funny in retrospect. I was absolutely certain that it was a terrible idea.
Those are usually the best ones. What field will dominate the next 10 years in exits and IPOs?
Oof. Exits and IPOs. Look, I mean, IPOs are a little bit harder, so I think exits are easier. I think exits are all in sectors that are absolutely petrified that traditional tech is going to come and kill them. So,
and retail.
Yeah, well, I mean, so retail to a lesser extent, but we see transportation, logistics, real estate, infrastructure, utilities, like big sectors. All of them are like in the midst of like, what does the utility look like when energy storage costs drop in half? You become the backup generator. Your grid that you spend all this time and energy that you were sure was going to just pay you dividends forever. It's like, oh yeah, no, we're going to be off the grid. If you want to like be a backup, that's cool. But like, we don't need you anymore. That's insane. So I think there's a lot of basically fundamental restructuring that will happen through M&A in some of the biggest sectors. So,
cable as well. What's overhyped besides ICOs?
Yep. Oof, what is overhyped? I mean, I think driverless is overhyped.
Interesting.
As an investment opportunity. I don't know. I think so much money has been allocated. I think we maybe overestimate or we underestimate the ability of non-tech companies, we being the investment community. And so I think in this case, it's like there's some M&A, there's some direct investment. There's the opportunities for VCs to make money, I think, have sort of ended in that space to some extent. Now, there are probably some fascinating business to be built, assuming things can be driverless, or there are fascinating things to be built in the same way that lots of interesting businesses were built on the mobile phone. That sort of autonomous stack is going to be an interesting thing to build with. But actually building the autonomous stack, I think, is a tough place to make money.
I think Google should be playing there now that their search business is getting killed by Alexa and virtual reality. Let's get a productivity hack.
Productivity hack. I think at this point, my favorite is all calendar related. So sort of deliberately blocking out time on calendar to get stuff done, and then using Calendly for scheduling.
Calendly is great. What's your strategy for blocking things out, and what's your day look like?
So the strategy is I sort of try and figure out when I'm most productive, which tends to be mornings, and so that tends to be the time that I block out. And then I have relatively short windows for scheduling calls and trying to get those down, in general to sort of 15 minutes. And then, trying to do more and more, writing. I think just writing things down sort of helps me clarify what I'm trying to do, and it sort of forces other people to do the same. So sort of pushing more things into written communication.
Email, Slack, Medium?
So Slack, very heavy use of Slack. I think we sort of did a comparison of sort of just how much internal email is removed. I think my inbox is probably a little over half, sort of what it would have been without Slack. So that's useful. What I'm struggling with on Slack is just coming up with a sort of a similar way of sort of prioritizing and coming back to tasks. So there's a little bit of how to organize and catch up on messages, which the inbox is useful for.
There's a startup idea right there somewhere, guys. You take Slack, you spit it into a to-do list, you can rank that bad boy, you add it into whatever software you're using, it pops out in Evernote, bing, bang, boom, you've got a list.
Yeah, no, the sort of the list making, the sort of how to get some inbox behavior, just because I think we trained for that. Like, I'm sure that I could come up with another way, but I want it to behave like an inbox sometimes. And then, Medium is super interesting. But I think just more generally, sort of forcing yourself to write stuff down. And then I think the other thing I want to get back to, which I used to do more of, is just drawing and sketching. So that's one thing I find a little bit frustrating in terms of everything's digital. No, but seriously, I mean, it's like, it's amazing that it's still very tough to compete with a pencil and a notebook, right? Like, we've made an enormous amount of progress, but that's still the thing I struggle with. And so the one hack is I grab pieces of paper, sketch stuff, take pictures of it, and upload it to Slack. It's not quite the same thing, though.
There's no better way to be creative than a pen and paper and plugging in the classical music. You rock out, and eventually you figure out whatever you didn't even realize you were thinking about. That is my ultimate hack today, guys. Shaun, thanks for coming on. I want to respect your time. I know you're incredibly busy. You got two little guys. What's one thing we should have talked about we didn't, or one piece of advice you want to leave people with?
What's the one thing the stuff that I find, I think, most interesting currently is how founders think about fundraising. Like, I get asked so much about sort of decks and pitching versus a much longer sort of trajectory. So I think Mark Suster talks about this as the sort of dots versus dashes, like relationship building. But a lot of that is a completely different style of communication than founders are used to, right? So things like sending updates and basically all the other documentation and pieces of communication that are involved in fundraising that are not your deck. So trying to formalize that a little bit more, but maybe next time.
Introductions and connections. Hence this podcast. I get the best investors in the world. I get to network with them, talk with them for half an hour, send deals to each other's ways, work together. It's a beautiful, beautiful system. Thanks for coming on today, Shaun. Where's the best place for people to reach out and say you're awesome?
Yeah, if you say I'm awesome, I won't believe you. But the best place to get me is probably just email, Shaun@urban.us.
If you won't believe that, go for the accent because the South African accents are awesome. I spent the first 4 months of this year in Cape Town. Friendliest, most incredible place I've ever been.
Oh yeah, no. So I mean, so the thing in Cape Town is when the sort of what is it, the BFRs are doing 30-minute trips around the world. That's where everyone's going to land up.
Oh yeah, when
The
once Elon's got it, because it's beautiful, it's cheap, it's unlike anything else, it's friendly. It's like if you took Columbia and slammed it, not the university, Columbia, like South America, and slammed
Yep,
it with London, and that's Cape Town. You have first world next to third world, and nothing in the middle. It's raw, it's
that's
interesting.
it's very funny because I've said to a bunch of people that I've met in the US that the easiest way to think about South Africa is to think about Colombians in Latin America.
I like
Anyway,
it. Guys,
yeah,
thanks for
that's
tuning in. If this has been
cool.
helpful, Shaun's incredible, so go say thanks to him, say he's awesome. Come on back over to thesyndicate.vc. That's our show. That's where we're at. If you guys haven't subscribed, you definitely should. We have some incredible stuff coming up, some incredible interviews, some roundtables with interesting people like Shaun. Shaun knows his stuff when it comes to the future, society, driverless, all of the good stuff people want to know about. And if you haven't left us a review yet, iTunes might delete your account. I heard it from a really reliable source. Steve Jobs sent me an
Yes,
email. Go to
I
the
can
Syndicate.
confirm.
Shaun knows he left 10 of them just to make sure. Go to the syndicate.vc/iTunes. Leave a review. Otherwise, if you have a Mac, it might erase itself, and then you have to restart everything. And that would be terrible. You'll lose Slack, and Shaun loves Slack. I do too. Thanks for coming today, Shaun.